Hello traders, Steve Ganz here, and I want to share a new trade idea with you. As you know, one of my favorite trades is the butterfly, and if you're not sure why, go back and look at some of the previous postings that I've done on the butterfly, the 7 reasons I like the butterfly. And then there's a follow-up that if you didn't quite get what I was saying, I urge you to watch the follow-up as well that was posted just yesterday or the day before that answers a lot of the questions that people have asked about the butterfly. So I'm looking at doing a RUT butterfly. Again, these are all paper trades for educational purposes, but let me share with you why I'm looking at doing this trade. So if we look at the RUT, this is a weekly chart on the RUT. We can see that it's just been trading sideways in this channel now for a couple of years. It has been consolidating in the upper half of the channel, but we're right back here at the very top of this channel. Now, this had been support going back for a ways. So it was support, came down and hit it, support came down and hit it, support finally broke through. Then that support becomes resistance. We rallied up to it, dropped back down, rallied up most of the way to it, dropped back down. And we've just been doing that ever since. Now, we are having what I would call, we're making higher lows here. So there is a chance that before too long, this might bust through. Could be tomorrow. Banks are announcing earnings tonight, and that could have a significant impact on RUT since RUT has a lot of banks in it. But because of this prior resistance and because RUT continues to just roll back over here, I am putting on this trade, which carries a little bit of negative delta with it. I'm putting on this trade where my shorts are pretty much at the money here. And then if the market does sell off, this trade's going to do just fine for a little while. It'll give me room to consider potentially adjusting it. The thing to look at, the question that I got most often is, well, this seems like a low probability trade, only a 20% chance of profit. Well, first of all, it's that low because I'm putting this on all the way out September 20th. But the reason I'm putting it on all the way out September 20th is that gives me a lot of time to adjust this trade. This chance of profit largely means nothing to me in a long-term trade that I plan to adjust over time. I've got up adjustment techniques if the market rips up from here. I've got down adjustment techniques if the market moves down. So the initial chance of profit is largely irrelevant to me. The important things that I'm looking at what is my max risk. Now this is for a 10 lot, which is a common trade size for me, a 10 or 20 lot. What is my max risk? What is my max profit potential? Keep in mind, I am never shooting for this max profit potential. That would assume that I would literally nail these strikes at expiration. Not going to happen. But I am looking to get 10, 15, 20% out of this trade. And again, I will likely need to adjust it as time moves on. So my goal here is to open this trade, and then this is going to be part of the start to finish series. I will adjust it as we go, and people will get to see what I mean by why this chance of profit is really meaningless, because I will adjust this as the market goes along. And again, my premise right now is that this might pull back a little bit from this all-time high, and we can see that this trade carries a little bit of negative delta, and that would be good if this trade pulled back a little bit. So let me go ahead, save this trade, and I'm going to save it in the start to finish series. And this is just going to be the opening of an iron butterfly. Now I'm doing this as an iron butterfly, but as a little exercise for people out there, what you may want to do, and I'll provide this link in the description down below, but what people may want to do, I urge you to maybe model up an exact similar trade to this and do it in just puts. So in other words, all these strikes are going to be puts. These are going to be long puts. These are going to be short puts. These are going to be long puts. And do the exact same trade in calls as well. So run all 3 of them side by side and see how they act very, very similarly. Now, one thing you will notice when I put this on, it's instantly showing a $1,300 loss or a $1,200 loss, something along those lines. I did not shop this trade. When I open these myself, I go out, and I'm very careful about getting into them. Here, I just took the price that was given to me, but as we can see, there's wide bid-ask spreads here, and this filled me all the way at the ask. That's actually not accurate. So I'm going to come in and I'm going to go more to the mid here on each of these, because that's really where I would fill. So this would be more like $39.50. So we'll put that as the cost basis on that one. And then here I would come in, and of course anybody that's trading live and tracking any sort of trades, they should come in and enter their exact fill prices. Again, if I were to go out and fill this trade, I'm sure that my fills would be more along the lines of the mid. So here to be 58.40 roughly, 58, let's see, 40, yeah, somewhere in there. Then here, this would be around 77.60, and then this would be more in the, see, that's really wide there, 50, yeah, to 54, that's 60 cents wide, so 53.70. So that's where I would really expect to fill, and then this is still showing loss, but again, it's showing loss because of those bid-ask spreads and because I just went to the mid. When I put these orders out myself, I put them out so that I'm getting the most premium possible for them. And if I don't get the most premium, I just move on. I'll just wait till the next day. There's nothing urgent about putting on a trade that expires all the way out September 20th. So just know that my personal position, if I were to go and start this trade, I would not start it down $350. So I'm actually giving myself a little bit of a hindrance in this trade at the start of it. But I'd rather, for educational purposes, I'd rather err to the side of being not so good as opposed to trying to present something that might be false or misleading. So again, paper trade here. Let's just see how this develops over time. And again, hopefully people will see what I'm talking about when I specifically talk about how that probability of profit right there is essentially a meaningless number for a trade that I plan to adjust over time. That's it for now, everyone. Take care.